So it is Friday, March 8th. Spring is just around the corner. I bet all of you folks up north are looking forward to that. Maybe I shouldn't say all. There's always a couple of crazy folks out there. Like, what? No, I love the snow. Nobody is piping up and saying that that is one of them, though. All right, let's switch on over here, take a look at what is going on in the indices. We had a little bit of a discussion on 2Ts here in the forum. I posted the link for the forum here in the chat. Basically, we're at some first main resistance here on this bounce. So we have a little bit of a 2T here, you can see here on the 4,000 tick chart. What I mentioned though is that when you're dealing with a 2T like this, you need to be using the advanced trade management that I taught you guys over the last 2 Mentor Mondays for those of you that are in League of Traders because of the trend placement. So because this trend is already more advanced, there's greater risk that things like a 2T here after the first bounce can go into, more congestion. They can have a harder time doing like the stronger follow through. So you want to be a little bit more aggressive with the management and understand what dynamics to watch for shifting momentum that could take you out of a position earlier. So for example, if on this 2B, this had basically followed through with, let me show you guys here. We'll move on to some more detailed stuff in a minute, but if this had followed through more like this, for example, had like a slower channel like that, then it can take you out faster. So you don't have to keep your full stop all the way up here because you might not be willing to have that potential for a continuation where it could be like a tilted phoenix, that sort of thing. So it's really important for you guys that are trading some of these scalp trades that are on the smaller time frames that are kind of going with a trend that is already more advanced, that you make sure you pay attention to that so that you can get the most out of these and still keep your risk lower. So this brings us to what we were looking at on the larger time frame. So last week and early this week, we were paying attention to the fact that, hey, we are getting into a point that this channel has to break. And when it breaks, it would tend to do so pretty quickly. So last week, we didn't have a full directional bias on that break yet because on the larger time frames here, you do have instances where this shift in this midway channel can actually go and break and have a second move up. So we've been looking at both possibilities over the last month as far as how this congestion would break out. And basically, you had your 3 highs. So it was pretty much coming into do or die territory this week. And that's what we were looking at the beginning of the week. And what we have seen is that the momentum shifted enough intraday that we ended up with the breakdown coming out of this. So what we were watching was this channel here, which broke just a couple of days ago. And it's been a pretty steady move to the downside. This is average momentum when we're looking at the 240-minute chart. I know it looks, much stronger than average when we're looking at some of the tick charts and whatnot, but overall, this is pretty average momentum. Daily time frame, things are a little bit faster. You've got some, it looks like stronger than average when you're comparing it on the daily charts. But what we need to watch here now at this point is the size of this move. Compare it to a lot of typical previous impulse moves. Not so much what was going on in here when things just got a lot more extreme, but what is typical in the past for the size of those impulse moves. And what you notice is that we are coming right at that typical impulse move level. So we're right at that zone here. Yep, as those of you are noted, we are switched here. We're coming into June contracts now. Talked about this yesterday. This is my backup computer for teaching. I didn't get the contract updated on this one yet here, but I'll do that here in a second. But the same setup's going to apply here. What we need to do is look at this measured move compared to a lot of these previous initial corrective moves. And what you'll notice is we're pretty close to that level. So that's going to mean that we are at a zone that intraday, we should start to see a shift to this selling. We should start to see that begin to change at this point. So if we look at, hold on, let me grab something quick. I want to show you guys the intraday chart here. When we look at on 15-minute time frames, one moment, I hit the rollover button and now it's thinking about it. Well, when we look at 15-minute time frames, what you guys are going to find is that when you have a trend on a 15-minute chart, this is one of the places that you can use a 20-period moving average. And if you're looking at intraday charts, for example, maybe the spiders or the Qs, typically what you're going to see is that a trend can hold that 20-period moving average on a 15-minute time frame for about 2.5 days. Once it gets past that 2.5 day mark, about 2.5 to 3 days, it's going to try to break through that. So it can mean that it can go into a longer period of congestion. It just bases out a little bit longer before the continuation happens, but it will generally break that 15-minute, 20-period moving average. So when it does that, so when you get to that point, basically on a trend, that tells you that you're going to expect more of a stall intraday. So this is where we're coming at currently in the market. And of course, just seeing the comparison on the daily charts to some of those other typical corrections off of the highs can give you that feeling as well for the support. Now, in the forum, why this is taking forever to roll over on me, but in the forum, we were also looking at the retracement levels on these. So when we are looking at I'll just pull it up here. The corrective move here, here's the Russell. This is what we're looking at for support currently on the Russell. This is our fan support. We're also at the 23.6% retracement. In the NASDAQ, which you'll notice is that this is the resistance we were hitting here, the 23.6% retracement back up on the highs of just this last main downswing. And then we've also got this zone here where on the S&P 500, we are coming into a pretty decent level of support on just the daily time frame. It's also closing in on the 23.6, but you have that corresponding synchronicity with a lot of these Fibonacci retracement levels. So not only the retracement level from this last rally, but also the retracement level from the downside move. So this points to a lot of those core support levels that you'll want to watch for on the way down. And when a lot of them are hitting all at the same time, that's usually going to give you some of the strongest reactions off of the support. So for example, here with this correction, what we have is because of the momentum on this move, like you see over here, there's a good potential that it can go into a little bit of correction and we can get a secondary move down. So that would place this level right here as the next main support level. So one of the potential outcomes that we were watching about a month or so ago for a correction off of this zone is that this even has the room to go and do a two-wave move down on the daily time frame. This here is a 76.4% retracement of this entire drop on the downside. So it's a pretty major resistance level on the daily charts. So a lot of times when you're dealing with a trading range type of move, the 76.4 is your main zone that the trend can start to stall or turn around. So even coming back down here, that 76.4% zone becomes another main level of support that you will watch. Usually you can count the waves in here. So many times you might get a nice solid two-wave move, two-wave correction, and two-wave move down. A lot of times it might not be, the perfect smooth move, but many times it is, and you will see that core development. In fact, over the last couple of days of trading, we've seen that two-wave move follow through really well ever since we've been turning around off of the highs. We've seen really nice two-wave action back and forth on the intraday charts. It's made it a very nice market for day traders and even for swing traders looking for a continuation on this, just because of how smoothly those two-wave moves have been. You can even see it here just in today's activity. So here is the nice two-wave move on the upside, two-wave again, bigger two-wave. Here's the 2T that we were looking at in the forum, and then the two-wave down. Second wave down also has a two-wave move. That puts this as a main little small support level, just on a 1-minute time frame. But that synchronicity with the two waves and the mid-level support, and also the fact that this is the completion of one of the core strategies that we follow with the avalanche and then the 1, 2, 3 also adds to the support level. So at this point, usually things will widen up a little bit better. It can offer another continuation, but you'll get a little bit of widening up after this 1, 2, 3 drop here. So this back and forth two-wave action, this has been really steady throughout the entire downtrend. Show you guys what we've got going on the S&P 500 here. But one thing I want to review with you guys as well, with the really strong drops where you get the stronger than average move, when you get reactions off of the lows, it will pretty much nearly always at least retest this previous low. So we were talking about this in League of Traders yesterday. We had seen it do a small retest here. And usually what you will see is you will get a small retest and then a larger retest. That's pretty common. So you'll get an initial move, a retest, bounce, and a retest of the zone. And then just depending upon, how the momentum shifts on the bounce, you can even get lower lows that can go to like a 2B. It can do a move that goes into a longer breakdown. But you'll usually at least get the retest of this zone of the previous lows. Not always the previous low exactly, but a retest of the zone. So on the daily charts, I'm going to show you the S&P here. Not the daily chart. I'm going to show you actually the 240 minute. Let's see. So you guys can see other previous examples of how that happened, just coming into support levels where you then go get the retest and even some slightly lower lows, just with the really strong initial drop off of the support or off of the resistance. So you'll get those retests of those lows. I'll show you it on the NASDAQ here too. So basically when you get these extreme momentum moves coming off of the highs, you'll often get those retests. You'll get the bounce and then it will retest the low. So even when it tries to then continue higher, it usually has a slower overall momentum, at least to start with, as it reacts off of the low. So that's the typical thing that we were looking at even over here. When it dropped really sharply, we were looking for at least to retest this previous low. And it ended up that this channel was what helped break the larger move as well. So right now we are at a pretty decent support zone. On some of the smaller time frames here, we're coming into, like I said, the 23.6% retracement off of the high. So this is a good extension on the intraday time frames. I would suspect we're going to see this widening up here again on the intraday time frames just to break out of this faster channel here. You can even compare previous levels of where we had similar types of moves to see what some of that widening up looks like. This entire move down here this morning is an impulse move. Let me see if I can tighten this up so you guys can see a little bit further back. It's kind of hard because some of these things are so skewed from the extreme move back at the end of the year. But what you want to look at again is this correction compared to corrections in the past, really before things went a little bit more volatile at the end of last summer. That can give you a little bit of a better feel for what some of those more typical corrective type of moves are. Again, you can see it here on the daily chart too. So you're comparing this move down here to a lot of these other prior corrective moves. This shows you these typical impulse moves. And that's what you got going on here as a main initial support. Now, of course, when we look at the bigger scale, this is something that could easily just be part of the first initial drop because we're breaking out of the channel here. Just like this one did, we're doing the same thing here. Question, when it hits the bottom, it's almost like a menu. Which one would be good? Grab the first, second, third, retest. Yes, so when you get to, when you're in like a range, your third level of support, your third test of support, and your third test of resistance is the one that is most likely to break. So when we were looking at the daily time frames, this was a third main high here in the indices. It's kind of harder to see it on the NASDAQ, but you had your three evenly spaced highs here, and here were the two lows that we were watching. So this became the do or die point, and this is why this became the zone that we knew that the range would widen up, that it would break, but you didn't know immediately going into that which level would necessarily break, because you do have many examples that will go and do a continuation. I mean, that's what the Russell did, for example. And what happens is you've got to drop down and pay really close attention to what's happening on the smaller time frame, because since that is the 76.4% resistance on the S&P 500, it again makes it a core level that can turn. So here was that shift on the Russell. So you'll notice right here, the channel kind of shifted a little bit and broke higher. So it gave that continuation breakout that also had that possibility on the daily charts for the NASDAQ and the S&P 500 too. This, of course, then shifted here as well with the overall market. At the time, we were looking at the possibility of shallow avalanches forming, and that's what we're seeing right here. And of course, this is some first main daily support here as well. Very similar to some of these first initial drops here, first rally here. And you see things can get a little choppier. So they can still head lower, but the momentum tends to shift after it hits that level of resistance. So you'll start to see that shift happening most likely in here. We do have possibilities of things to do a 1, 2, 3 where it can go a little bit faster, like a 1, 2, 3 like that. But we need to see how this base holds here, right at this support. So watch for the momentum shift within it. If it goes for 1, 2, 3, it's going to be a faster little base, probably just a couple of days like this. We'll see what we got going on in the other markets here. I'm going to pull up trade station so we can go a little bit faster. Flip through some of the Forex pairs. If you guys have questions on individual stocks you want me to take a look at, then please go ahead and post those in the Q&A questions box. While that loads, there was a question on showing the larger outlook on the S&P 500. So what we've been talking about over recent months, basically the entire last year, is that this action here is usually going to bring this into a longer zone of a trading range. So overall, with this widening wedge, it can go back and forth within this wedge. That's also why this had the possibility that it could do a second wave up. And we still have to be cautious with the first wave down here because this is something we talked about yesterday, there are cases where it will break the channel to the downside and then it will still manage to turn over momentum and go to that higher high. So really getting that 1, 2, 3 is what you need to see for the confirmation. It's not that that happens a lot, but it is something that will happen. So you have to know that possibility as you go into it because this only had one main swing up before it had this congestion at the midway zone here. So that's why that possibility is here at this point. Now, right now, the momentum is strong enough that it's trying to nullify that possibility. But as we went into that correction, I made sure that you guys knew that that possibility was there because you will see examples where it will go, it'll have the shifted momentum here like this, and it will look like it breaks lower, and then it will come back up and go into the measured move like that. So this little flush, if that whole channel is slower, that can still bring it up. Now, right now, the momentum's fast enough, but we only have one main swing down, so we don't have that second swing down in here to see if that's going to confirm yet. So it really depends on how it reacts to the support level. As long as it holds the support level, kind of hugs the support level, doesn't bounce more than 50% off the support level, then we should be able to continue lower and go back in to retest the previous zone here of the prior lows. But if it does bounce 50% in here, that can still keep shifting this within this resistance level. And it would go like that. It would change that overall momentum. So then it could continue to play out at this level of resistance on the weekly and daily time frames. We've talked a lot about mid-range setups at this point because if you only have one swing down, you can get many different outcomes on how it tries to react after that one swing down. And so the one swing up going into congestion, you don't have the bigger trend exhaustion of a second swing that decreases the possibilities of where it can go after that second swing. So midway zone, it comes down to really watching how things react off of that resistance, because even though it's a main resistance level, it can do things like this where it shifts momentum. It can go into more of a trading range. We could have gotten an inverse head and shoulders, or it can go and shift and come back down to this level here. And that will impact larger term setups too. So you have all of those possibilities and they drill down to just what happens on the momentum in here. So this is a trickier level for a lot of traders because it's not as clear cut as over here, where you have very clean two wave moves, very high probability that the main reaction is going to be a breakdown. All right, let's go look at our Forex pairs here. I'm going to start with our euro dollar. So what we've been watching on the euro dollar here is this was our main support on the daily chart. We got our two wave up, a little bit of a phoenix, and then that two wave broke to the downside with our avalanche, gaining momentum here. So here things are going to widen up. Because this is such an extreme drop to lows, there's a really good chance that this can retest the lows. It needs to hold under that 50% ideally to get that really strong retest. But as long as it reacts at that 50% level, then we can get more selling coming in. This can go into a little bit of a longer range, especially if it goes up a little bit past the 50% of this last drop. Then what you got to watch is how far does it retrace this larger move. So if it holds in the lower 50%, you can get really good continuation type of moves where it can keep breaking. Here again on this weekly is the same type of thing that we saw happening on the daily charts, where it gets messy after just one drop. It's that halfway move level. So this is a much trickier zone for traders. We have seen some pretty clear-cut two-wave moves in here, but betting on the larger directional break becomes harder. So you have to stick to some of the smaller moves until you start to see shifts like this, where the momentum actually does shift. So here, for example, this downside move, that shifted the momentum here. So it really had the potential. It could have popped faster, knew that this level was going to lead to a pop, but you don't know until it's actually underway how well it's going to hold, because it is in the midway level of this previous move, and that midway level can break either way. So as momentum shifts, many times you might have to change your predominant expectations as the momentum is continuing to shift. So right now, larger timeframes on the weekly, it is looking like it wants to try to go and do that secondary move down. And again, this is an example of where sometimes if you're just looking at this channel, this might have been a little bit of a tighter channel. It could have popped up, broken through that channel, and then still gone and had a continuation on the downside. Now this one hasn't, didn't really do that, but that could have happened if this had a little bit of a lower low. So you can see how just the channel break alone, though, doesn't necessarily mean it's going to fully turn around. It can just be a smaller correction that can then try to continue to the downside. So it is a more difficult zone for knowing exactly which way the larger time frames are going to go, and you do have to watch the multiple time frames. And so what I'm usually doing is I'll position myself either way, just playing those smaller moves and then really watching the momentum on the outcome. So if the momentum is slower, like we saw on the upside move on the S&P, or sorry, on the euro dollar on the rally right here, then I'll adjust my target level. I'll look for just the upper channel zone. I'll just look for that two-wave move and then look for zones where it can actually get reversals. So like a 2T, avalanche, things like that. But if this had been faster on the upside, had come in more quickly up here, then I would have been looking for the possibility of it to do a 1, 2, 3 on the upside, or to do a phoenix. That would be part of like an inverse head and shoulders that could go farther and faster again. So this could have gone into, for example, inverse head and shoulders. Just depends upon how the momentum reacts off of those levels. And you don't know how it's going to react until you're in the midst of it many times. On the euro dollar, or sorry, dollar yen, I'm going to check out our weekly here. We are also in the middle of these zones where there's not a predominant larger time frame bias. It's coming down to what's going on the smaller time frames. I mean, you can see this kind of looks a little bit like it's trying an inverse head and shoulders, but the drop here was so fast that it makes it harder for this to get going. For a better head and shoulders, this would have had a steadier move to the upside, would have held more of a pivot low instead of shifting, and then would have gone into a more gradual channel back and forth here. So it would have looked more like that for the highest probability inverse head and shoulders. So by shifting here, kind of makes things at this point a lot more iffy on the larger time frames. So our pound, this has been really good with the reversals over the last 2 weeks. And this is where we were looking at, again, a 1, 2, 3 type of pattern. This is something someone had brought up in the forum as a question on looking for, I believe they were looking for a continuation move. But we were right at that two-wave move, the 1, 2, 3, that you'll often get things trying to widen up and hold that level. So here it starts off a little bit slower, and we're still getting the continuation. This is basically a two-wave move on the smaller time frame here on the downside. Right here you can see it a little bit better. So you can see how this gets off to a little bit of a slower start because it actually holds that pure pivot high, has more gradual move to start with, and then shifts the momentum. And this is trying to bring in some faster move. So we're right at some initial support here intraday, but I think we still have room for this to continue to try to push a little bit lower just because the momentum is trying to increase here. So things like 2Bs and stuff like that intraday, they would be very scalpish at this point. The other one was the pound yen, and this one was a little bit stronger, but the same type of action where, let me show you the intraday on this. It got off to a slower start on its corrective move. This is what I call the shallow avalanche or shallow 1, 2, 3. It starts off with the correction, bases out. Usually you get a 1-to-1 ratio to start with, and then it gives the breakdown with stronger momentum. You'll get a two-wave move, and then things can widen up again. This can go out twice as far, so it can even go out to here and still do the same thing and still have strong moves. So those are basically like two do or die points, basically. And so right now we're again at, first main support here, but we're only halfway in the bigger move on the upside. So this still has room that it can try to continue lower on the daily charts. But at this point, it really can start to go either way because it's right at that 50% zone. So things get trickier again in here. When you're at the upper end of a two-wave move, you have higher probability for success on pivots. You have fewer options for how things can play out. When you get into the midway zone, things can get a little bit more difficult. So here's another way of how things can play out. This is another shallow avalanche, just on a bigger scale. But you get the two-wave move. And then the reaction. So just on, as like we were looking at on the NASDAQ, some of these smaller impulse moves, that's what you can watch here to help give you an idea that this is partial support as well. But when we look at the bigger impulse moves, you can see how there is still potential that it can go further. I wouldn't enter a new short at this point, but if something forms on like a 240-minute time frame, it would offer the continuation for it. Right now, you're probably going to start to get more back and forth type of movements. It'll be more like the two-wave back and forth intraday, kind of like what you saw up here. Usually what you'll start to get here at this point. It can even do it with a little bit of a shift, like in here. You can see this same idea happening here on the dollar Swiss. This is just on the smaller time frame here. Coming into today, how we still got that same measured move action here. So it's a good resistance level, but now we're right at about that halfway point on the correction. It's just the typical smaller impulse move at this point. Larger weekly on this, again, I don't have a huge main bias on this one. I think this could go either way on the weekly. Not really looking at a major setup on that one on the larger time frames. Just playing mostly the daily and the 240-minute time frames for the Swiss. Looney here, we're also again halfway back up. This is the inverse head and shoulders. So this one was more of the clearer setup because you had that clean, even spacing we talked about. But when it first came into this support, it was again the halfway zone. So it really came down to the smaller momentum shift that helped drive this inverse head and shoulders that has taken off over the last week. So you had a bit of a shift in momentum again at that midway point, came into a 2B, hit the 2B, went into the Phoenix for the shoulder, for the inverse head and shoulders. And that's what drove this higher. So this is a much cleaner setup where you have a higher probability of what's going to happen at that midway point. And a lot of the midway point moves, we haven't seen this happening. It's been a lot more scattered, and it hasn't been as straightforward as it has been in the Looney. So these have the highest probability because they are closest to what the textbook strategies look like. Right now on it, I wouldn't do anything too much here other than just scalps on the intraday because this momentum is so strong on the upside that I would just look for more of the choppier back and forth action at this point. So it's kind of going into more day trade territory here. This is working on its second move. The second move's a little bit slower. You can see it's trying to react more to the support. This is our Aussie. We're coming right into that retest of the previous low. Again, it hit the low with really sharp momentum. So this is why a lot of times you get that first initial retest. This is what we saw yesterday on the S&Ps. And then you get the bigger retest. And that's what's going on here. So it's had the two waves down. And now it's trying to figure out if it wants to do an inverse head and shoulders or if it actually wants to base out and do another second wave down. And that's what I think the larger term outcome is trying to aim for. But we could get a little bit of a reaction here first before we see that try to fully form. Let's look at the monthly here. So what that would look like on the monthly is basically trying to do a second wave like that. So I think we have the possibility of that happening in here. Just have to see how it tries to hold this inverse head and shoulders that's going on the weekly time frame right now. So I would be looking to, on the smaller scale, focus on some of the upside with the inverse head and shoulders, but then keeping in mind that the second drop here is certainly a possibility on the bigger scale. Okay, platinum is another one that we looked at last week. So I want to pull that up here too because this has, let me grab it for you. On our daily chart, I'm going to come back to this time frame here. But on the daily chart, it was again that two-wave move. So again, it was another one that had a main resistance level on the larger time frames for the turnaround. And then on the 4-hour chart, you can see that shift in momentum that was really similar to what we saw happening in the overall market before the overall market broke down. So you had your two tests of lows and then it broke on the third test. And then this is the short for the continuation that we were watching in League of Traders, just to continue that bearish bias that we saw at the end of last week. And now you've gotten the two-way measured move. And so things are kind of shifting a little bit. I'm looking for basically 76.4% retracement. I'm looking for it to try to get down into this level. So I still think we've got a little bit of room here, but the main two-wave continuation has stalled here. So there's still a little bit of wiggle room if you have a little bit, still holding a little bit of this, but just expecting this to kind of try to do more of the back and forth here. Gold, we've got kind of inverse head and shoulders 2B type of action today. We are right at that bigger main daily support that we've been watching. So we should continue to see this holding this zone as we go into next week, continuing to react off of this level. Because of this momentum shift here, there is room for this to try to continue lower, but it really can do anything at this point because this could even go up into the range like this. Basically, this overall move here, even though it picked up speed towards the end, it's still a pretty average move on the daily chart. So we can get more of that back and forth. We just have to see how does it hold this level of support and how does it shift momentum in here. On the weekly, you can see that it's kind of at the same type of resistance that the bonds are at. The bonds broke down and they are currently up here retesting the level, but they're doing it on a daily time frame versus the weekly time frame here. So it really is the exact same pattern that we saw on the bonds on the intraday. So it had the Phoenix, 1, 2, 3, main resistance. I want to show you the bonds because I want you guys to see this comparison here. So here's the bonds chart. This is the 8,000 tick chart on bonds. And look at what that looks like compared to the weekly chart on gold. So if you follow what happens in the bonds here on the 8,000 tick chart, that's going to give you a pretty good idea on the type of action that you can see happening on the weekly chart on gold. Here's your breakdown on bonds. Again, this is the 8,000 tick chart. Very, very similar type of action here on the breakdown. Here's your Phoenix, Phoenix, 1, 2, 3, 1, 2, 3, shift in momentum, drop, drop. Watch this bonds as a guide for how to play gold in the upcoming weeks. Just keep this ZB chart up, follow it over the next week or so, and you can use that as a general guide for gold on the weekly time frame. Things that might shift are momentum, but the general directional type of movements will be comparable as far as how the trend actually plays out. I'm going to grab this chart for folks to just watch this in the forum here. All right. Let's clear this up. And we got a question on TCS. So I've got time for you guys. If you guys have a couple of questions you want me to take a look at. This is a pretty good support here on the tech bears. So you've got what usually happens at these levels is you get the shift here, you get a bounce. It can sometimes do a two-way bounce, but then it'll come back down and it'll usually slowly go here. This is actually a good idea. So it can go do the two waves, come back down, kind of have these little pops. So you'll get this repetition. It'll do this, it'll do it on a smaller scale. It can go again and do it on a smaller scale. So you kind of see these waves that just kind of steadily go lower. So you're at basically this point now in the process. And so you're looking at that kind of that repetition. So a lot of times after this little pop here, when you get the slow move goes all the way back down to lows, previous lows, you'll get that a little bit of that reactionary pop, and then it'll usually slowly go back down again. On IPWR, so this is actually coming into that same type of zone. This looks like it was an IPO one point. So you got that main breakdown, got your three waves coming out of it, the shift. So you kind of got that 2B type of action going on down here. So what happens with these is they can go and do these little pops, but then they can kind of scale back down. So I wouldn't be too overly excited about this longer term, but if you see things happening on smaller time frames, a lot of times these will do pops. They'll get in some initial activity. A lot of pump and dumper places will try to drive up prices on this. It's very rarely a good longer term investment unless there is something that fundamentally changes within the company itself. So, for example, if you've got companies like Netflix might look like this when they first IPO, and then as it looks like, mail order DVDs kind of dying off, the company handled that by shifting into online streaming. So they made a real fundamental shift in what they did as far as product line development and everything. And as long as you've got a company that can manage to do that, you can get back up. Otherwise, it's going to be like Blockbuster. And yeah, not so good. So that's kind of what we've got going on with whenever I see something like this. How is Netflix doing? Netflix is basically doing the very opposite thing, where now it has gone gangbusters again. It's actually at a point that it's going to have a really difficult time trying to sustain itself here. So I wouldn't be too excited at the moment for new investment opportunities in here. It's not really giving me a main turnaround setup yet. What it's just good. It's just doing that 1, 2, 3. And so this is a lot like what we are seeing on platinum on the daily time frame, with here's the current corrective move on platinum on the daily time frame. So that's basically what's going on here. It looks like it's going to be stuck in a range here for a little while. Let's go down to smaller charts. It's right at the midway zone. Again, this is the same issue that the entire overall market is dealing with kind of that shift there. Daily time frame, it's a 2T. This is the same thing that's going on Apple right now as well. So this has some more downside in here, but watch when it comes into about where that parallel level will be. That'll be the next support on the daily charts. WCG. WCG is coming into some support here. Again, this is kind of a bigger feel for what happens at that midway zone. So see how this shifted again here? Midway level. It took this to T in here. Here's the initial flush. And again, this is how some of those flushes can recover. So it flushed, recovered, now has two waves. It's kind of slowing down. It looks a lot like that IPWR. Main support level here. Uh, Usually with this, it'll still come and try to, do some retest of the lows. You don't usually get like a main massive recovery off of this. It needs to shift on the intraday charts in order to get any stronger recovery, because if it just hits this level and tries to hold it without kind of shifting momentum to lows, then what can happen is it can have a better chance of going in and creating like a larger avalanche that can break down, continue to do another breakdown like that. So see how the momentum shifted here? It had the 2B, and that helped pop it back up. That's what you usually see when you get the stronger upsides, is you'll see some stronger shift in momentum. Same thing at the high coming down. You'll see something that will help shift the momentum that can bring it a little bit more strongly and with a higher probability. So versus buying just like a support level, you might get an initial pop, but you'll usually get a retest. If it has a main initial pop without a shift in momentum, it'll usually retest the lows. Looks like a lot of you are watching WCG here. Let's check out the intraday chart on this. Yeah, so basically in this pattern development, you've got the avalanche and then the 1, 2, 3. So it's at the zone that the range should widen up at this point. So you'll start to see some bigger back and forth swings now on the intraday charts on the 240. You'll see more of that, those bigger swings back and forth at this level. PHX. I've seen these go both ways a lot. We're right at two-wave support, but it hit it really fast. So this is a point where, again, the widening up is more likely to happen. But I've seen this pattern break either way. I've seen it go and break down and continue lower. Actually, it's the same, for that to happen, that would be the same pattern that we're seeing on the S&P 500, where, let me show you. Oh, Phoenix. Well, you know what? PHX, it's a good discussion here anyways. You were talking about the symbol. But anyways, on this, I want to show you this here because this is the comparison. It's probably on the time frame chart, is a little easier to see it. Right here. That's what you're looking at as a possibility. But anyways, if you're actually trading PHX, I'm like, what are you doing in this one? But anyways, if you're looking at that, that's what it is. But your question was on the Phoenix on PHX, you meant Phoenix on WCG. What time frame are you looking at, Scott? So WCG, just as the monthly chart. So we've got that extreme pivot high, just like you've got on Netflix. So a lot of times these come up, they'll retest the zone that they broke down. This is already considered to have done that, but they can do it on a bigger scale too. So you can get a bigger scale retest of it as well. It doesn't have to do that, but there's certainly the possibility to do that. And then if it tries to continue to hold here and doesn't retest, it'll usually be a slower overall descent than ascent. But on like a 240 lower time frame. This was a Phoenix, by the way, for those of you just studying Phoenixes. Comes off of a 2B. That was a really clear-cut setup there. It's kind of gotten a little bit more choppy and not quite as straightforward right now. This is a zone you'll see Phoenixes happening on the smaller intraday time frames, like a 30-minute, 15-minute, but they have more difficulty really fully following through. The difference is over here, you have that shift from the 2B. So it has the 2B, that shifts this extreme drop, and then it gives the Phoenix more power. So the Phoenix hits first resistance with the measured move, but it's able to do the 1, 2, 3. What does this chart look like right here? What are the other two charts that we were just looking at that look really, really close to it? Yep, bonds on the 8,000 tick, and gold on the larger time frames. What was it? The daily, weekly. So here is bond. Just going to kind of widen that up and put it up here for you. So here, it wasn't as slow of a 2B shift, but that's that same type of zone. So you've got your 2B, your Phoenix, 1, 2, 3. Here's your shift. Here's your shift. Here's where things are standing right now. So this is what ended up happening here. So that's the possibility that you can watch for on bonds, and then that's something to watch for on gold too. And it's going to depend on how this momentum shift plays out. But just like bonds and the WCG happened, that can help with the gold at this support level too. That's what can allow this to bounce a little bit better on gold right now. So just watch for these three here. Can kind of help you out as guidelines for the much larger time frames on gold. All right, gang. So that's all we have got going on for today. I'm going to wrap this on up, and I am heading to New York. Anybody here going to happen to be at the New York Expo? And we have a couple people saying yes, and a couple people saying in their dreams, and a couple people saying no way. Some are like, no, way too cold. Bruce, I'm having Sarah email you, so hopefully that will help. I'll give you the link for that too. Hold on a second. I'm going to be there until Wednesday. So for those of you that will be at the New York Expo, shoot me a message. Let me know. You can email me at tony@tonyhansen.com. I'm going to put that in here. So for those of you that are going to head over to the expo, shoot me an email at this address. I am going to be teaching on Tuesday morning, bright and early. I think I am like the first session on Tuesday, and I'm going to be talking about momentum. You can, let me grab you guys the link for the expo. I will post it here in the chat room. Here's a direct link. Either one of those will get you there. I got a tickle in my throat. So here is the link. I will be doing Monday Mentor. Monday Mentor, Mentor Monday. I will be here on Monday. Well, not here, I'll be in New York, but we will still have class on Monday. And we will be talking about trend development on Monday. Especially two-wave count. Bruce, so your question there. I am going to grab that. Hold on a second. And Bruce, I've got that link for you to update your credit card. Here, I'm just going to post you. If anyone needs member update information for credit card, let me send this to you. For League of Traders, folks. David, which one are you looking, which link is it that you are looking for? The forum? Oh, you need the link for the alerts section? Is that what you're referring to? Or the forum? Let me post the link for the forum here. This is the forum, so you guys can all join in the forum. If you're a League of Traders member, you can also be in the alerts section. And if you email help@tonihansen.com, she can, Sarah can help get you into there. So, yeah, so there it is. Also, for those of you that are in League of Traders and are looking to access the alerts forum or the regular forum, and you do not have a smartphone or you don't want to use your smartphone number, if you go to, I'm going to give you guys a link for the alternate way to use Telegram versus your smartphone. Let me grab that quick. So here is the other way you can get into there without using a smartphone. And then you can go to telegram.org to download the desktop app. And we are still in beta on this right now, just as we figure out anything that folks are running into. But as soon as we have all questions answered that folks have been asking, we will get that sent out fully to everyone. All right, everyone, I am heading out, so I will see you next week from New York. You are very welcome, guys.